Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody is doing well. Okay, let's get started. So, did you know that there was going to be a Fed meeting tomorrow? Anybody hear about that one? I'm just kidding. Right? Unless you've been living under a rock, right? So let's talk about that for a minute, right? Clearly, that is going to be huge tomorrow. Lots of volatility coming in. In fact, today we've been just chopping all over the place with the S&P. So, hey, how you doing, Jim? I don't believe so, Jim. I mean, surprises in terms of 75, I think, is in the bag. I think that's a given. The surprise is going to come from what the how the press conference goes and that type of thing. But again, at the end of the day, it's not what they say. It's the reaction of the market. And so right now we are at peak uncertainty. Everybody's kind of on pins and needles with especially with rates jumping again today. The 10-year went above 2.5. I'm sorry, 3.5. The 2-year is like at 4, and so on and so forth. So one interesting, I just shared this with my members, which could be setting up for a possible relief rally tomorrow. So I've been talking to you guys about what's going on under the surface with Tesla and some of these stocks, even today. But here's a little interesting tidbit. The 2-year, which is on the shorter end of the yield curve, obviously more reflective of Fed funds rate and what the Fed is doing, right, fighting inflation and all that. But here's an interesting little tidbit. We just hit over, we crossed 4%, kind of just holding there on the 2-year. The rate on the 2-year on June 16th, when the S&P made the bottom, remember that monster rally we had in the summer? It was at 3.25, right? So the S&P, so now with the 2-year almost 75 basis points higher than when it was in June, the S&P is actually 225 points higher than in June. So you can extrapolate whatever you want from there, but my point to everybody is that it seems to me like maybe that terminal rate is coming in at 4%, at least for the short term, and also the fact that a lot of the smaller stocks are basically have bottomed. If you go look at a bunch of charts on some of these big mega caps, the smaller cap kind of hyper growth stocks, those actually put in a bottom. Like look at the chart of Tesla. Look at the chart of some of these other stocks. They bottomed about a month and a half ago. So just kind of interesting situation. So let's get into again, you guys, if you want to subscribe to the newsletter, hit the link below. I had a few people take advantage of the 5 free day. 5 free day, spending the 5 free days with me. Actually, a couple of them actually took some nice trades out of that 5 free day. So it actually paid for them to be in the sessions. But we'll see. So if you guys want to join me for that, again, hit that link below, contact my support. And I've actually had a few people contact us and then never follow through. So if you're one of those, I actually try to reach you. What's up with that? As a trader, you guys got to make some decisions, right? It's interesting to me. Okay, so Michael, with coming November general elections, do you expect the Fed stopping? No, Michael, that has no bearing. I believe that and again, I don't want to spend a lot of time on that. Here's the deal: the Fed's credibility is on the line, right, Michael? Uh, and I think that overshadows everything because if they stop and start like they did back in the 70s, all this kind of stuff, I don't believe that's going to be the case. I mean, I could be mistaken, but uh, I think the Fed's credibility is at stake, and I think that's far more important to Jay Powell, which is the chairman. Remember, he's run the show. Uh, so that's those are my thoughts on that. Does that make sense, Michael? So for that reason, I believe that the Fed is going to just keep on pressing on. Yep, yep. Now, here's the thing. Since we're opening up this discussion, and again, I'm not going to spend a lot of time because we're here to look at charts, right? Um, Here's the other thing. Have we actually seen the tightening, raising interest rates? We're already starting to see it in the housing market and mortgages. That has not filtered through the economy. And I do believe we're going to have a recession next year, uh, right? No question about it. We're going to have a recession. Things are going to slow down because a lot of this stuff has to filter through the economy, and we haven't seen that. It takes about 6 to 12 months to have all that filtering into the economy. You're already again starting to see it in the housing market. If you guys are in the mortgage business or trying to buy a house, you already are starting to see the impact of that. But here's the thing though, wages. Yep, wages still are not are still climbing. The core CPE is coming down, but in fact, just to throw a little, remember, you guys know we're along wheat at TTS, right? Did you see wheat today? Anybody? By the way, if you are not trading the grain markets, you should. So we're still long wheat. We are. So let me just again. Let me. We put on a SPY volatility position today in front of the Fed tomorrow. I do expect a huge move in either direction. It's a market neutral position. So all we're looking for is expansion and volatility. So if you guys were in my class in the options and you haven't signed up yet, I have a class coming tomorrow. If you guys were in my class last Thursday, I'm still going to offer you the discount. I got a class coming up tomorrow. We're putting on a few positions going into that. So that's a way to take advantage of that as well. Okay. So contact my support if you're still interested in doing some of that. I'm going to have a class tomorrow for my members, not for anybody else. Okay. Also, so let's finish up here. All in all, on the on the S&P, we keep holding this 38.45. If you look at everybody, pull up your charts. Take a look at. I think I mentioned this level Friday, 38.45, 30. It's a level off a pivot. We used to call it, right, Kelly? Gold is dead to me. Right? I'm more of a silver guy now. And in fact, we had a really nice trade. Our members had a really nice trade. We had a nice trade in silver. Go back and look at the recording on Friday, the YouTube channel on Friday. Yeah, we had a really nice trade in silver. I prefer silver over gold. How's that, Kelly? Look at the charts. All you got to do is look at the charts of silver versus gold. Yep. That's all you got to do. Don't fall. Are you a gold bug, Kelly? Because if you're a gold bug, you're like the bug on the windshield. Right? If you're a gold bug, you're the bug on the windshield. Anyways, right? No. Oh, you got it signed. Did you sell? Oh, did you sell? Did you sell puts on gold? Oh, okay. Um, you know, I would tell you, Kelly. I mean, it's all predicated on the dollar. If the dollar keeps raging, gold's going to keep going down. I don't really see anything on the gold chart. If we get a backup in the dollar, let's say tomorrow we get a nice stock rally and rates come down a little bit. Yeah, you probably get a relief rally in gold. But on the charts, if you look at your charts, there really isn't anything on the charts until you get down to about 1600, 1625 area. Um, that I mean, it's basically just right holding at a support area, a bunch of lows down in here between 1671 and 1662. Can you see that, Kelly, on your charts? Hey, Gallo, how you doing? Okay, so that's pretty much it. And there's a bunch of in fact, TTS we're looking at 1700, 17. I think I mentioned these levels as well. On if you look at your charts on gold, 17, right around 1700, 1720. There's some really good looking distribution areas there. So um, that's what I can tell you. Silver, on the other hand, looks pretty good. Again, we closed out our position on Friday. I think I told everybody we've got resistance at 2083. I am going to look to get long gold, silver again in the low 17, in the low 1800s. But that chart looks way better than gold. Also, copper and platinum. I'm looking at both of those. Look at those two metals and tell me if those don't look really starting to shape up really good. Platinum and copper. So one of the things I would admonish you to do is, I know everybody kind of gets emotionally attached to a certain market, right? Like gold or the S&P or whatever. You can't be so kind of one-dimensional, because so what I like what I tell my members, and when I coach people, which is what I basically do, I have 2 or 3 calls a week with my members, one-on-one, is, don't get so pigeonholed into 1 or 2 markets. Don't fall in love with any market. It's just a chart, and just look at the markets for what they are. So with that in mind, again, why, are you making a ton of money trading the S&P in the last couple of days? Unless you're scalping or whatever, which, again, I'll remind you, if you do that, over the long term, you're going to end up a statistic, right? However, look at the grain markets. Look at wheat today. Look at copper. Look at platinum. Look at silver. And so on and so forth. So you got to be flexible enough. Look at oil, nat gas. What do you think? Are those markets having some really nice movement? And what it is people are afraid that the volatility and all that, but that's, we have mini contracts. There's a I don't know if you guys know that there's a micro copper contract now that's really good, right? There's a 1,000 bushel. You've got corn, wheat, and soybeans has 1,000 bushel contract. In fact, I got a trade. We at TTS we're looking to buy soybeans and some more wheat on the future side as well, utilizing primarily the 1,000 bushel contracts to mitigate some of the risk. So I encourage you guys and gals to expand your horizon. How many of you guys actually trade some of these other markets? Or are you kind of just locked into, whatever? You know what I mean? So when and I don't mean to get off on a tangent here, but Kelly, I mean, silver looks way better than gold. And it's not my opinion. Just look at the chart. You know what I mean? Just and look at platinum. Look at the move on that thing. So, anyways, okay. So that covers the metals. I guess we just covered the metals, right? And the grains. On the S&P, so let's set up for tomorrow. Clearly, the market is anticipating. So to 75 basis points, I think it's a lock, right? So 75 basis points is a lock, and it all depends on how the market reacts. So based on what I'm seeing right now, and we know that it's going to be literally a coin flip, if you will. But if you take a look, we had these big sell-offs in recent, in the last month or so, with the surprising first the Jackson Hole, right? That shocked everybody that Powell was so hawkish, and then the surprising CPI, and now we're back to kind of pausing here, and I would say right now we're kind of in a range between 38.50 and 39.75 if you look at your charts, right? Even today, we bounced nicely off that 38.45 pivot low, or as I call it, that's actually a level I gave you guys, I believe on Friday, and we're getting a little bit of a bounce. We had a nice lift yesterday, and so all in all, I would say we're still kind of range bound tomorrow. Now, what we're positioned to do at TTS is, again, this is the beauty of options. We know that there's going to be a move. Nobody knows where the moves, is the market going to just drop a couple hundred points, or would it shock you to see the market rally a couple hundred points? Either way, if you're positioned properly with some SPY options, which we're already locked and loaded on that, it doesn't matter, right? The whole premise is we're gonna have an expansion volatility, and the beauty of that is that it doesn't matter what direction. That's why I love options so much, because with options, you have that you have those strategies available to you, if you understand how to do them and practice doing them, and aren't afraid of the of the volatility. In fact, as we know, I love volatility. Volatility creates opportunity. And then there's always two sides to the coin, right? People are afraid of volatility because they don't have any discipline, or their processes isn't really worthy of trading, and so they just keep getting knocked out and whatever, and so they get scared of volatility. But if you understand how the markets actually work, and you have various strategies that you work with, you actually embrace volatility, right, Gallo? Yeah, we love volatility. Robert, nope. That I don't do any of that. That is like that. The only thing that who benefits from that type of strategy, Robert? The broker. Yep, the broker. No, I don't do that. That's I don't believe in that jazz. Nope. We're gonna keep it super simple, my friend. Yep. Yep. At the end of the day, that is, yep. Right, Gallo? Anyways, okay. If you want to know what we're doing, Robert, ping me up on the let's get together for 5 days. You'll see what we're doing, right? It's free. You know the word free? I'm just kidding. Oh man. All right. So also, so let's tie this up with a bow, right? Right, Fernando. Yeah, you were in one of my class a couple of weeks ago. Isn't that right, Fernando? Anyways, okay. So look at the Russell 1788. That level. Look at the charts. Everybody, by the way, if you guys are new to the channel, what should you have? Should you have my mug up on your screen plus your charts? What do you think? Right? Have your charts up. And by the way, I can show you all kinds of charts, and I can show you, oh, look at this, look at all this, look at this great trade I did in retrospect, how much money I made. Is that real? Yeah, look at all these, right, Kelly? Yeah, look at all that. Like, yeah, after the fact, right? Yeah, I can cherry pick every single trade I made money on. You know how I feel about that. Yep. Not good. Yeah, that's we are real here. That's part of the reason why I named the website Transparent Trading Solutions. So you're not going to get that from me. Okay? So if you're looking for that, I'm not going to give you that. I'm going to give you education and give you the truth, pretty much. Okay. All right. So with that, look at your chart of the Russell. Notice 1788, 1780. Notice what that is, right? That thing just keeps on holding right there, right? 1788. In fact, so that's going to obviously be now a key level. Now, at TTS, we have a level below that, which it's already, again, it's like I like to say, it's locked and loaded. We already have that set and forget. It's ready to go. I have an alert. It's below where we're below where that is. So I'm looking for, again, a price extension there. I also have a few other trades that I'm looking at. If the market drops off, I'm going to start picking up some stocks. TSM, just so you guys know. Yep. Oh, good for you, Gallo. I hope it's lemonade. Oh, no, I'm sorry. Yeah, well, it could be spiked, right? I missed the adult part. Hopefully, yeah, maybe you put some extra in there, right, Gallo? Some extra stuff. Okay, you guys, man, you guys are pulling me all over the place today, but that's cool. I'm having fun. As I told you guys before, this is like, I love doing this, man. This is like I have so much free time on my hands, and interacting with you guys is really fun. In fact, I always look forward to this, even though it's only twice a week. That's okay. All right, so where was I? Yeah, it's going to be interesting. Either way, and again, since nobody knows what direction the market's going to go in, that's why we're in the SPY right now, where we have a volatility setup, and as long as we get a monster move, which obviously probably going to happen tomorrow, that's all that's required for that thing to make money. Okay. All right. The dollar. So let me spend a little time on interest rates, because as I've been noting here, what have I been telling you guys? It's all about interest rates. It's all about interest rates until it isn't. But here's the thing, just to reiterate what I just talked about, the 10-year finally dropped below. Remember that 3.5 we've been talking about, and it actually finally dropped below that 114 level on the charts, right? But here's the deal. How did the market react? And this is the key, is because remember, there will come a point where interest rates, in other words, the market is interesting, because the market will come to terms, if you will, with higher interest rates and start discounting a lot of the forward bad news, if you will, right? So if you look at the stocks underneath the surface, some stocks have already had a huge, bear market, right? People have gotten slaughtered on some of these stocks, these hyper growth stocks, right? They're down anywhere between 60 80%, even Meta. I mean, some of these stocks are crazy, ridiculous. I mean, what was that? What was it? Gosh, I can't remember. It peaked at like 480. It's sitting at $30 a share right now, and I can't remember the name of it. I'll pull it up and share it with you guys next week. Right? You guys know what I'm talking about. Those kind of stocks, right? So under the surface, a lot of these stocks have just been decimated, and they're starting now to resist some of the sellings. Now, would I go and buy some of these stocks? No, because a lot of them, I would say, just like when I was around in 2000 when the bubble, tech bubble burst, some of these stocks will not ever come back, like Beyond Meat and Peloton. I can tell you right now, those stocks are never coming back. In fact, it wouldn't shock me if they go out of business. Yep. So there are going to be a bunch of companies going out of business. Yeah, that one's also on the bubble. Excuse the pun, Robert. Yep. Right. That guy's still. That one's on the bubble. But there are a bunch of stocks, a bunch of companies out there that I do believe are not going to make it. Yep. So we'll see. Okay. I would not be buying that stock if you're going to buy anything, buy quality, right? Quality at a reasonable price. That's really what you're going to buy. So, okay. So TLT. Remember, I keep talking about if you guys have been with me consistently here, I guess I'm going on almost a month and a half, 2 months doing these. Where did I say that TLT was going to go ultimately? Does anybody remember? You guys know TLT, right? Where did I say TLT was likely to go? What price? $100. Where is it at right now? 106. Yep. I still believe it's going to now at 100 or actually lower than that. There's a great looking level. If you pull up your weekly chart of TLT, you'll see a really high quality level below 100. But I'm going to start positioning again. We had some, we were long, last week. And I think I told you that option expired. We took a really small loss on that. But I am going to start positioning again, putting on some trades, longer term, kind of couple of months out on TLT coming up here. I'm going to do it via options. Okay. So I am getting ready to buy some TLT because think about this. Let me ask you guys a question. If the economy goes into a recession, what are rates going to do? Which is almost, I believe it's almost inevitable that we're going to have a recession probably next year sometime, right? What? Yeah. No, Robert. No, they're going to go lower. Exactly. Yeah. Rates go lower when the economy slows down. Yep. So one last thing I'm going to leave you guys with. This went really fast. If you guys have any long-term money to put away, and not really long-term, 1 to 2 years out, you're getting 4% on a 2-year note right now. Government guaranteed, right? And the kicker is when we get into a recession next year, you may be able to trade that out at a premium because if you lock in 4%, that bond will garner a premium because the rates are going to be lower than where you purchased it. So let's say let's say you bought it today with 4% yield and rates go down to 3%, say middle of next year, you'd be able to trade that out with a nice gain on the that's what we call capital total return, right? So you got your yield and appreciation. Okay, so check into that if you have some safe money you want to put away for a little bit. That hasn't happened for a long time, and that is another kind of cross current to stocks, because remember when rates were at zero, we had that thing called TINA. What is TINA? There is no alternative. You had to put your money in stocks, so you weren't getting anything on the interest rate front. That's changing, and so now you've got competition for money. Now you got these great yields, government guaranteed, and people are losing money in the stock market. That's why, if you think about it, that's why stocks go down, and people are a little bit skittish to get into the stock market. Does that make sense, everybody? But that's going to change probably coming up soon. So thank you guys for joining me again. Give me the thumbs up. Tell people about my channel. Put some comments on the bottom. Sign up for the channel. If you want the newsletter, sign up for that. It's free also. I've had some really good comments about the newsletter. They are getting something out of it. I mean, I put a lot of thought into it. I write it every Saturday. So and I do give you guys some little tidbits. It's not just a bunch of blah blah blah. So there are some stuff in there that you guys can actually use. And then again, if you want to join me for the 5 days, I'll also contact my support team. Tomorrow, everybody, be careful. If you are not, if you're not, if you don't like the volatility that's going to ensue after the Fed announcement, then stay out and then wait for the dust to settle and then get back in. Okay. And the volatility is going to run across all the asset classes, right? It's going to run across primarily bonds, stocks, and the dollar. And the dollar just been really just tight ranged, and right hovering near the highs. So that probably breaks out and pushes, if we get a higher stock market, that will probably sell off the dollar index as well, and then rally some currencies as well. So, okay. All right, buddy. Thank you very much for joining me. Hope you guys again, be careful tomorrow. I'll see you on Friday. Until then, take care. Okay. Stay safe out there.